Welcome back to my 5 favorite people. Hope you guys are doing absolutely amazing. Today we're going to be going over my entire weekly paying ETF strategy. So if you guys like content like this, make sure you guys hit that like and subscribe button. Without too much talking, let's go ahead and jump straight into it. So I'm going to go ahead and share my screen. If you guys, if it's your first time seeing this channel, we go over a lot of things. But as you guys can see, here is the actual portfolio. You guys can see we have actually taken a nice little actual upwards trend. Last Friday, the market took a huge dump. Looking on the 1 week chart, you guys can see we were down all the way down to about 8%, which is down $2,000. But we have slowly started making our way back up. So you guys can see here's my portfolio. And I want to tell you guys, if this is your first time, I do have a little script I'm going to be actually using, but we're going to be talking about high yield weekly paying ETF. And we're going to talk about my strategy that I use for 2025. I actually started and bought my first actual weekly paying ETF, which was ULTY, also known as ULTY, on August 17th. First thing I want to talk about is going to be what actually are weekly paying ETFs. Like I said, this is your first time. You're new to this, and you're probably like, oh, what is this? You can get paid every single week from an actual ETF or from a stock. Like, how are they actually paying you? So we're going to walk through some of these things. Weekly paying ETFs distribute dividends every single week. Some of them distribute dividends every week. Some of them also are monthly paying. For example, you may hear something called QQQI from Roundhill. They do pay out dividends every single month. They pay out 12 times a year, while other kind of dividend paying funds pay out every single week. So the difference is you get paid out 12 times per year, usually at a higher actual distribution rate or distribution amount. And then you have a weekly paying distribution where you get paid out 52 times a week, usually like a lower kind of actual rate, or, you know, sometimes the percentage is a lot higher whenever it comes to those because they're a lot more riskier. They provide investors with consistent cash flow. These ETFs are perfect for people who are seeking passive, steady income while maintaining exposure to equity markets. Now, well, I will say, with this being said, I do actually receive dividends every single week. And also, I receive almost a dividend every single day except for Mondays. Tuesday, Wednesday, Thursday, and Friday. I'm getting paid 4 days out of the week, every single day of the week. If you guys can take a look right here, you can see it has constantly been improving and growing over time, and that's where it actually comes into. Now, I want you guys to take a look. Whenever you are looking at these weekly paying ETFs, you are not necessarily looking at these for growth. These are strictly income plays. So yes, sometimes there is NAV distribution, or there's NAV decay, there is NAV decline, and if you guys don't know what that means, that just means your net asset value, the total amount of the stock. For example, if a stock is $10 and it goes down to $5, that's kind of what they call a NAV decay or NAV erosion. And this happens a lot of times. You'll see it happen a lot in these weekly paying ETFs, because whenever the weekly paying ETF pays out a distribution, it actually pays the amount from the actual stock price itself. So the amount that it actually pays out is actually how much it actually drops. So for example, you'll notice with ULTY, that's talked about a lot of times, every single week, it'll have a slow little upwards trend, but then around like Wednesday and Thursday, it'll actually drop down, and then it'll kind of have a slow little upward trend, then it'll slowly drop down. But the thing is, every time that it drops down, it doesn't reach that last price that it was last week. It may be a couple cents short, and the problem is that if it actually stabilizes and it only down like 1 or 2 cents every single week, it's not much of a deal. But whenever, like, for example, last week, whenever there's something that happened in the market, whenever tariff news came out, it's like, okay, we had the actual distributions pay out. Let me show you guys. We had distributions pay out, but we also had market news. So it was like the distribution paid out, but then we had some bad market news on top of it. So that kind of makes it hard, because then you guys can see how it usually, like for example, here's like a perfect example. It'll like pay out. This is not the 1 week. This is not the 1 month. This is the 1 week chart. So it's kind of hard to look at it. But just take this for example. It'll pay out, let's say, and then it'll slowly make its way back up, and then it'll pay out, slowly make its way back up. But then whenever it has like a payout and then it drops due to market news, it's kind of hard for it to actually come back up. So that's where the NAV decline comes from, the NAV decay you guys may hear about. I personally like the actual weekly paying ETFs, like I said, because you guys do get paid every single week, every single day of the week, if you guys do have one paying out every week. So you guys can see the most previous week, this was October 9th, I got paid out $312 for holding one singular actual ETF. This was one of them. You guys can see another of them, WPAY, that paid out on the 8th of October, paid me $41. We had another one on the 13th, which is actually today, that's going to pay me out, is TSYY, pays me out $235. We have another one, YETH. That's an actual crypto ETF. It paid me $18. So you guys can see it's slowly, I'm making money every single day of the actual week, and it's paying out, and it is simply passive income. I don't have to do any work. I don't have to lay a brick. I'm making money as I am sleeping. You guys, I literally, it's amazing. It's actually crazy, the amount of compounding and passive income opportunities that come from investing into these weekly paying ETFs. Now, there are risks that are involved into it, so we will talk about it because there are some risks that may be involved. Now, we're going to talk about slide number 2. I'm saying slide number 2. It's all on one page, but we're going to walk through it. Why I choose weekly over monthly payouts. I mean, if you guys remember early in the video, I was telling you guys about QQQI. I actually am holding QQQI. It is from Roundhill, and they pay out a monthly distribution every single month. They pay out once a month compared to like a WPAY or a ULTY that pays out every single week. Or sorry, I said this is from Roundhill. This is from Neos. Sorry. QQQI is from Neos, and you guys can see the NAV is a lot more stable whenever it comes to these funds. If I actually take a look at the much more larger chart, you can see there's more of an upward trend. It kind of falls in the direction of the S&P 500 whenever I like to look at this. So you guys can see the year-to-date chart, exactly how QQQI Neos' fund. You can see how it looks on here. If I were to pull up SPY and go to the one-year chart for SPY, it's going to kind of almost look the exact same. So you guys saw that one year-to-date chart, and then take a look at this one. It looks almost the exact same, still right upwards correlated. So yeah, that's the thing whenever it comes to these monthly paying funds. You guys don't have that much of an actual NAV decay because they don't have the fund itself doesn't have to recover from the actual premiums and dividends it's paying out every single week. It only has to recover one time a month. So yeah, that's the difference between the monthly and weekly. Now you're probably wondering, why would I actually choose to go with something that's going to overall not grow as much compared to something that is declining in value? Because if you guys take a look at ULTY, which I'm sure you guys have heard, the overall total return for just the past year is 50. It's down 50%. Look at the year to date. It's down 40% right now. So you're probably wondering, why would I even invest in something like this that's down, that would literally lose almost 40% of all my money? And that comes from the actual more compounding effect you guys get. For example, with, like I told you, the weekly compounding effect, it goes from 52 times a year compared to 12 times. So imagine you have $100 and that's just being invested over and over and over and reinvested 52 times a year. It's getting compounded. That $100 is going to keep getting multiplied compared to just getting multiplied 12 times. And the thing is, you guys get the more volatility that's in the market, the better premiums we get. So sometimes we will have a higher actual distribution payout. Sometimes we'll have a lower one. So that's also the risk you guys are taking. But most of the time, you'll go and actually do your research. You'll find an actual fund that is paying pretty consistent dividend payouts. The third thing that you guys can see right here that I'm invested in, the ETFs I'm actually invested in. I don't know why it says this right here, but you guys can see my actual portfolio. I will show you. I'm very transparent on this account, so if you guys like how transparent I am, make sure you guys hit that like, subscribe button, because it's sometimes it's a little hard to come on here, show. Some people don't like to show their losses. And for example, last week we were down a lot of money, and if you guys have been keeping up with the channel, you guys will know we just been on a straight upwards trend. Like I'll show you guys at 3 month. Besides this little drop right here, we were just slowly making our way upwards. Like every week we were just going up. We had a little drop, but we were just going up. And some people don't like to show their losses. I know a lot of people didn't make any videos last week just because of how down we were. Some people did get margin calls. If you guys don't know what margin is, I recommend you guys checking out one of my previous videos. I'll have one tagged up here somewhere. I'm going to talk about investing and how to use margin, not necessarily safely, but also have a much more secured method and an actual strategy and not just gambling with your margin. But sometimes hard to show my actual portfolio value, so I want to show you guys this is exactly how it looks. Now, here are all my actual holdings: ULTY, QQQI, WPAY, TSYY, YBTC, YETH, and then Chippy. Now, with that being said, I actually found an old video. Now, this is actually my channel. This is exactly 1 month ago. I want you guys to take a look. 1 month ago, my account was sitting at $982. You guys can see my exact holdings. I was holding, this is a REIT right here, YMAX, TSYY, ULTY, NVDY, TSYY, SPYI. You can see the holdings are completely different here. You guys can just see. This is exactly what we're looking like. But my main thing is that you guys know we are growing for income. We want to get this thing to a literal dividend money-making machine. So yeah, you guys can see this is where we're at now. I mean, it's been a month. I think it's been about 50 days since that video, and now the portfolio is sitting almost 27 times what it was back in that video. It's insane, you know, like it's insane to see the growth that's actually came from this account. And if you guys actually take a look, yes, this is exactly how much I'm holding. I have 31,000, but if you guys take a look at my actual total portfolio, exactly what I have invested, including margin, you guys can see my total account value is $47,000. So I'm sitting $3,000 less of $50,000 account. And my yearly goal, what I wanted to have in this account before the end of December 31st of this year, was $100,000. And you guys, I'm telling you, this is not going to be possible without these dividends coming in every single week, having that compounding effect, getting almost $300, $500, $600, $700 every single week coming into my account. That's going to help generate, boost up this account, because like I said, this is not a growth actual account. I'm not looking at this. I have my retirement accounts. I'm looking at this as a pure income play. Like I told you guys, my strategy, I kind of just explained it right there. I'm focusing on reinvesting dividends and keeping a diversified allocation between high yield and growth focused ETFs like QQQI, ULTY, TSYY. By balancing yield with sustainability, I aim to grow my income portfolio over time. Now, I'm not going to be afraid to say, yes, I am chasing yield, and I am not afraid to say that. I am on the much more younger end. You know, I'm coming from a crypto background. I have a lot of risk that comes in my life, but also I want to de-risk a little bit from crypto, because being down 20, 30% in a single day is much more different than being down 8% in a total month. So, you know, I'm de-risking and I'm taking my risk. I'm taking my risk curve and taking it from crypto to income ETFs, but also being able to get that weekly, daily actual reoccurrence of income coming in every single day and every single week. You know, I'm actually able to see returns and not just simply just watch my money go down, down, down in crypto. It's something to keep in mind. Slide 5, realistic results so far. You guys can see my average weekly income has steadily been increasing throughout the compounding of reinvestments. It's not about quick wins. It's about building consistent long-term cash flow through disciplined investing. Like I showed you guys, you can see where I started, for example, with ULTY. I mean, this was the first one. My first ever payment I ever made in a dividend was August 22nd, 2025. I was holding 154 shares, and it made me $15.45. If you guys go back and watch this video, look how excited that I get for my first ever dividend payment of $15.45. And then watch my previous video, watch how excited I get for $312. The same excitement that I get for $15, the same excitement I get for $312. I'm grateful and I'm glad that it's growing. I understand there is NAV decay, there's NAV erosion. You know, the stock market sometimes tanks, you know, there's news that comes out. But I am very happy. I'm grateful for all the income that does come in. And I know that long term, 2, 3, 4, 5 years from now, this is going to be a huge compounding snowball machine. It's going to be producing over 6 figures every single month into my account. So, you know, this is exactly my strategy. You guys can see some lessons learned in my long-term outlook. The final lesson that you guys need to know: time in the market. Keep this in mind. Consistency beats timing. Weekly ETFs let me stay engaged in the market and compound earnings efficiently. Long term, I expect these ETFs to continue performing as reliable income vehicles. And with that being said, I'm not necessarily one singular ETF. I'm not saying ULTY is going to be the thing that's going to be here 10 years from now. I do think ULTY will be around for a long time. But guess what? If ULTY somehow the management can't get things right, can't get that NAV stabilized, the yield drops way too much, I'm going to sell my shares. I'm going to get into something else that's going to be a lot more stabilized. I don't marry my bags. I do the research. I have conviction in my plays. I hold until I don't have conviction anymore, and then I actually jump ships. But if I am going to jump ships, I'm going to let you guys know here on this channel. So you guys got to make sure that you're actually subscribed to this channel. You know, even have post notifications turned on, because if you guys have post notifications, you guys will be able to get notification every time a video is actually dropped. You guys, you're not going to want to miss it. But with that being said, that's going to actually end it for the video. Hope you guys actually enjoyed my full-on actual income ETF strategy. I'm just reinvesting 100% of all the dividends that do come in, and I'm simply just growing my portfolio over time. And the goal is to get this account to $100,000 before the end of this year. Once I hit that $100,000 goal, I'll show you the huge goal we have coming into 2026. It's going to be crazy. So if you guys like content like this, make sure you guys hit that like and subscribe button. And until next time, I'll catch you guys here soon. Take care.